We'll be going over Worksheet 6-3 of IRS Publication 970. This is the worksheet that taxpayers would use to calculate the taxability of their distributions and basis from their Coverdell ESA. So even if you don't contribute to your Coverdell ESA anymore, let's just imagine that you did save money in it a long time ago, and now you're starting to take money out to pay for college. So depending on a variety of factors, some or all or none of your distribution could be taxable, and we need to be able to determine how much you're going to pay taxes on and how much is left in your Coverdell ESA in which you have basis. Basis is basically, you can almost look at it as the tax-free part of your account. So as you know, most of the time your Coverdell ESA, as long as it's used for qualified education expenses, it's all tax-free. However, the amount that you contribute, which is your basis, is the amount that you can pull out at any time tax-free, even if it's not for qualified education expenses. So there are three parts to this worksheet. We're going to cover each of them. Part one is going to be where we calculate the qualified education expenses. We'll talk about that momentarily. Part two, we're going to actually go through and calculate the taxable distributions and basis. And then finally, in part three, we're going to summarize everything basically based on what the calculations would have been for all of our Coverdell ESAs. So if you have multiple Coverdell ESAs, you will only need to complete part one for one of those accounts. However, you will need to complete part two for each Coverdell ESA that you have. So if you have three, then you would be doing part two 3 times. And then finally at the bottom in part three, you would basically summarize all of the amounts contained right here in line 14. You would add the total of those 3 Coverdell ESA amounts. So let's go ahead and start at the top of the form. So again, we're talking about qualified education expenses. As a rule of thumb, you can't take a double tax benefit. So if you're pulling money out of your Coverdell ESA, that's fine, but you can't pull money tax free out of a Coverdell ESA that you already took a tax deduction on, or that you claimed a tax credit on, or that was provided through a tax-free scholarship. So we're going to account for each of those as we arrive at what is known as the adjusted qualified education expenses. So in line A, and kind of where we can distinguish the different parts, lines A through H are in part one, and then part two has numbered lines. So let's go ahead and start with the line A. We're going to enter our total qualified education expenses for the tax year. Let's just assume that we had $20,000 of total qualified education expenses. So if you need a better understanding of what qualified education expenses are and what they are not, you can find that information in publication 970 itself. So we're going to now account for other tax advantage methods for which paid for those qualified education expenses. So in line B, we're going to enter the amount of expenses that were paid for through a tax-free education assistance, whether it was a scholarship, whether it was veterans educational benefits like the GI Bill, whether it was a Pell Grant, if your employer provided educational assistance, for example, the military all the branches have some sort of tuition assistance program. Those would all be considered tax-free educational assistance. So for the tax year, let's just say we had $5,000 worth of that. That means if we pulled money out of our Coverdell ESA, then this $5,000 cannot also be accounted for as part of that Coverdell ESA distribution if we want that Coverdell ESA to be tax-free. We can pull as much money out as we want as long as we're willing to pay taxes on the part that is not tax-free. In line C, we're going to now enter any qualified higher education expenses that we took a tax deduction on. So you could take a tax deduction possibly if this is for the betterment of your business on Schedule C or Schedule F, or on Schedule 1, line 12, if you are eligible to file IRS Form 2106. So that happens to be available for reservists, fee basis government officials, and performing artists. So that the line 12 on Schedule 1, you would have to be eligible to complete IRS Form 2106, take that tax deduction, which is an above the line tax deduction. So it's an adjustment to gross income, not from gross income. So that money cannot be allocated towards the Coverdell ESA. So now in line D, we're going to enter the qualified higher education expenses for which we calculated either the American Opportunity or the Lifetime Learning Credit. So that's on IRS Form 8863, which covers both of those tax credits. So I put $4,000 here because let's just assume that we're taking the American Opportunity tax credit. The AOTC basically is a dollar for dollar tax credit on the first $2,000, and then the second $2,000 is a 25% tax credit. So even though the tax credit is a total of $2,500, the education expenses to get to that $2,500 tax credit is actually $4,000. So that's why you would not write $2,500 here. So in line E, we're going to add the total of those three lines up, and we arrive at $14,000. So we had $20,000 of qualified education expenses, but we had $14,000 worth of education expenses that were paid for through some sort of tax advantaged program, whether it was actually just paid for by a scholarship or outside source, whether we took a tax deduction or we took a tax credit. So when we subtract the $14,000 from $20,000, that gives us $6,000, which is known as the adjusted qualified education expenses. So if we only took $6,000 out, then basically that would be the net distribution. It would all be tax-free, and then we could kind of walk through the taxable distribution and basis calculation would be a lot simpler. However, we have to account for the fact that we took $10,000 out from our Coverdell ESA. So now this says total distributions from all ESAs. Let's just assume that for the purpose of this video, we only have one ESA. So now we divide the line F by line G, and we arrive at 0.600. So that means our AQEE is 60% of the total distributions. So by the time we finish part one, we know we're going to pay some tax on the Coverdell distributions. How much? We don't know yet, because we don't know how much basis we have, and we don't know how this distribution is going to impact that basis. So that's going to be part two. So now Part 2 addresses one education savings account. So if you have multiple, you have to do Part 2 for each account that you have. So in line 1, let's just assume that we're still managing to contribute to our Coverdell ESA in 2023. So that means we entered $2,000. We don't include any of the amount of any rollovers or any return of excess contributions. So now we're going to go to line 2, and we're going to, let's just say that our basis as of the end of 2022, the prior tax year, was $20,000. That's the basis in this single ESA. So the basis consists of 1, all contributions before the tax year, and minus the tax-free portion of any distributions before this tax year. So there is additional guidance in the form instructions. I'm going to kind of read it and then we'll just discuss it briefly. So if your last distribution from this Coverdell ESA was before 2023, you must start with the basis in your account as of the end of the year in which you took a distribution. So if it wasn't 2022, then you would have to go back to the last year where you actually took a distribution from your Coverdell ESA. If you have to go back before tax year 2002, then that amount would be on the last line of the worksheet in the instructions for IRS Form 8606, which is actually now used to calculate non-deductible IRAs. For any tax year after 2001, you would simply use the worksheet in publication 970 for that year. So basically, spoiler alert, this is going to become the basis for next year's Coverdell ESA. So when you arrive at this line 2 number, you're going to go back to the worksheet and you're going to pull this line 15 out. So when you do complete these worksheets, you should keep track of them so that you know what to carry forward to the next tax year. So and then the rest of the note basically says you can determine your basis in this Coverdell ESA as of the end of December 31st, 2022 by adding to the basis as of the end of that year any contributions made to the account after the year of distribution. So basically what it's saying is, let's imagine your last distribution year was 2020, and at the end of that, your amount was $13,200. And if you contributed it in 2021 and 2022, then you would simply, let's just imagine that you contributed $2,000 each year. If your last distribution was as of the end of 2020, then you would simply add the total amount of your Coverdell ESA contributions. So that would be $4,000. You would add that to the $13,200, and your new basis would be $17,200. So as long as you're not taking money out of your Coverdell ESA, you can simply take your last recorded basis and then add any net contributions. Your account balance doesn't matter, like how much it grew. None of that matters when it comes to your basis. So now we're going to add lines 1 and 2, and basically now counting the 2023 contribution, the total amount of basis is $22,000. But now we have to recalculate basis when we account for the distributions. So this is where the math gets a little tricky, and I'll tell you, when you get to about line 7 or 8, your brain's going to start overthinking this, and you're probably just going to have to push the imaginary "I believe" button and simply follow the instructions. It won't make sense, but if you just do what the form tells you to do and trust that the calculations are correct, you can always go back and make sure that, number one, the math from one line to another is appropriate. And don't ask how, just trust that you're doing each step correctly. And when you get to the bottom, as long as each individual step is correct, then you should be in a good place. So we took $10,000 out of distributions. We're now going to see how much of that is taxable and how much of that was allocated to basis. And then we're going to calculate the tax-free distribution and adjust the basis, all in 11 short steps. So in line 5, we're going to multiply the line 4 amount by line H, which is 60%. We're going to get $6,000. Simple math. We're going to subtract $6,000 from the $10,000, and we get to $4,000. In line 7, we're going to enter the total value of this ESA as of the last day of the tax year. So let's just imagine that, even though we took $10,000 of distributions, there was still some account growth, and we actually ended up at $15,000 instead of $12,000. So now we're going to add lines 4 and 7. That's the total distributions plus the total value of the ESA. So $25,000. Now we're going to divide line 3 by line 8. So this $22,000 divides by $25,000, and we get 0.88. From there, we're going to multiply the line 4 by line 9, and we arrive at 8,800. We're now going to subtract the 8,800 from the amount on line 4, and we arrive at $1,200. So for line 12, we're going to divide line 5 by line 4, which brings us back to the same number as line H. If you get a different number, you should probably recheck your math, because to get to line 5, we had to multiply the line 4 by line H. So that now we're going to divide line 5 by line 4. So I don't think this is a really value added step. This is more of a check to make sure that you can still do mathematics. So basically you get to the line H amount, which is 0.600. If the result is 1.00 or more, then you would enter that instead. You'll multiply the line 12 decimal by the line 11 amount, and we get $720. So this is the amount of your qualified education expenses that was allocated to your distributions and is tax-free. So now you're going to subtract line 13 from your line 11 amount. So the 1,200 minus line 13 gives us $480. This is the amount that you would include in income from your Coverdell ESA. And then you're going to subtract line 10 from line 3. So we get the $8,800 from $22,000, and that gives us $13,200. So that is the adjustment to basis. That's what you're going to carry forward and put into line 2 of next year's worksheet. And then at the very bottom, we would take the line 14 amount from all of the part 2s. If there were 3 different part 2s, you would add them 3 different amounts and put the total here. And then you would also include that on schedule 1, line 8Z. You would this is the taxable amount of your distribution, and this would be additional income that you would report on the front page of schedule 1. So again, Even I kind of like started losing it, just kind of the lineal understanding somewhere around here. So, but when I read the instructions and additional information, it started making sense. So, if you're completely lost, again, go back to just checking sure that each step of the math is correct. That you that you know how you got from line 4 to line 5 to line 6, so on and so forth. So if you do each individual step correctly, then the amount that you get to at the bottom is going to be correct. So just trust that part of the process and understand that you may need to incorporate other factors. For example, if you need to if you had a distribution from a college 529 plan, then there's a part of the publication that has to do with coordinating your Coverdell distributions with your 529 distributions, what the IRS refers to as a qualified tuition plan or program. So we'll put links in the show notes to the forms and schedules that were mentioned in this video. If you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's any topic that you would like to see discussed in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.